So I was, preparing to come down here, and for whatever reason, I was flipping the radio between CNN and Fox News and getting more depressed every second. Not a good way to prepare yourself to speak. But on the way here in the Uber, I'm on a call, and the driver says to me, like while I'm on there, he's like, "I just passed my U.S. citizenship." And so this guy, and he had a flag, and he pulls it up, and he's just like this. And they immigrated from Iran, so, it made me just reset and think how lucky we are to get to do this today and to get to be in this industry, as challenging as it is right now, and for me to be here with all of you and this amazing group of panelists. So thank you all, and thanks for supporting California mortgage bankers. So what the rates? We've got, I feel like this is group therapy for me because I get to live it every day. I get to try to navigate these waters as the leader of a small mortgage banker. I collected some brain trust here to get some advice. And so we're going to get it right from everybody, but maybe each person could just quickly introduce yourself and your organization. How's that?
I'm Richard Greaser. I run marketing at Truve.
Hi, Maria Moskver, CEO of Cloud Verga. Good to be here.
John Foy, I'm VP of Product at Poly.
Hi, Terry Davis. I'm a VP at CoreLogic, responsible for retention and growth.
Thank you all. Thank you all. So I got this, what the rates, that was the topic that everybody put together. But what we're talking about are macroeconomic headwinds. And you could say this is a timely topic, but it's been timely for about 3 years now, unfortunately. So just on the, on the headwind side of it, we do have rates, and, we've been predicting lower rates now, and I think everyone has kind of given up on that, at least on when it's going to happen. But we also have other headwinds. We have, the insurance industry is really, gripping with high costs and, natural disasters, and, I just got dropped by my insurer in California, and I'm going to have to go to the California Fair Plan. We have home prices, there's just, lack of supply, and so prices are elevated. We've got the lock-in effect of people not willing to sell their homes, so we have, low inventory, which leads to lower choice for people who do want to buy homes, and, they have a tough time negotiating it against cash buyers. And so all that just leads us to basically lower volume, more seasonal volume, higher costs, because as a business, you can't dilute your fixed costs with as much volume, so the costs are up. So that's what we're living every day as lenders out there. So I'm just going to get some sage advice here. We're going to start. So any business, runs on the revenue side, less expenses equals your survival, your sustainability. Of course, you have to take some of what's left over, if there is anything, and reinvest to make sure that you're prepared for the future. And so, I thought we could dissect this from the revenue, the expense side, scalability, and then, of course, change management. So we're going to start with Terry. What advice would you have for lenders on the revenue side of things?
Thanks, Chuck.
Just the easy one.
Just the easy part, right? Gosh, I've been thinking about this and doing a little studying up, because I don't think there's anything we haven't already seen and heard in the industry as ideas have been created about how to generate new business and drive revenue. Stratmore did a study, this reflects 2023 data, with consumers about what drove you to choose your lender. And some 35% chose the lender that they currently do business with. So there's a real opportunity for us. I was curious, is that a good number, 35% retention? Like, what, is that good? Are we happy with that number? Could it be higher? I think we could do better. And so I want to lean into that for a second, just one of my hot takes around retention. It's my new job at CoreLogic. I had no idea. So much opportunity. One of the things that I think we want to ask ourselves is, what do we know about what the customer's doing now that we've previously given them a mortgage? And how do we stay connected with them sort of in their post-home purchase journey? And I see some head noddings because I think some of you have made those investments, right? But I would think about that and how you support your loan officers in helping them have more insights into those borrowers. You know, I think about it in terms of like CRM enrichment. I have a bunch of information about consumers in my CRM, but I might not have a lot of signals about what they're doing now. Do they have a propensity to get a cash out refi because they're looking to improve their home? Are they unhappy with their home, or do they need to make a move because they've grown in terms of the family size? Or maybe they're just eligible for home equity, and as a bank or a credit union, you have the opportunity to offer them a home equity loan. So I think CRM enrichment and knowing more about your current customer is a hot take for revenue.
Because of all the data that's available
All
to
the
us now.
data, all the data.
Who else? So one of the things we could talk a little bit is because there's, like, if we were looking at all the factors on retention or return customers, obviously the data, so you know when to engage with them, is one part of it, but the customer experience, I think, you know, that they had the first time is probably pretty relevant. Does anybody have any thoughts around that piece of the business, or how to stay engaged with the consumers over time as well too? Those would be other ways that we could probably bump that number up. Go ahead, John.
I'll jump in. One of the things that I've had the pleasure of seeing with multiple lenders and partnering with on is finding ways to take enriched CRM data and more information about the borrower to proactively run scenarios and find out what options are, especially in this market. Being able to identify how you can work with borrowers. I think one thing that you said that's really critical too is, what are the goals of that borrower? You know, it's not about just feeding a tool that's supposed to spit out a result, but depending on their situation and what they're trying to do or what they could potentially be trying to do, you might have very different outcomes that you could arrive at. So identifying that and then having the connectivity in your technology stack to be able to pull that data in, get pricing results, be able to drive those conversations back to and proactively go into those customers to engage them and bring them in. Yeah.
Love that.
Yeah, great. Richard?
So for the first time in my life, I had a friend call me up who actually used our software with one of our clients to verify his income and employment. And it was really fulfilling for me, right? It's my childhood friend since I was 4 years old. And you know what he said to me? I was like, well, how was the experience? He was like, great. You know, it took 2 seconds. I was done. I was like, great, that's how it's supposed to work. But what he said to me afterwards was, I said, you know, what did you think of the experience with your lender? This is our client. I'm not going to share who this is right now. And he says, now I know where all the C students went. And I said, that's my industry, man. Like, I felt bad. Like, this is our client. But it definitely took, I asked him, obviously, more questions about why that experience was bad. And it's because he had to do all of the legwork in terms of getting that loan closed. There was a second lien on the home. And he had to find that out. And he had to go and get a lawyer to sign off that the seller is actually going to get that taken care of. But this is very close to heart, right? This is just happening, I think, across a lot of different lenders, and there's a lot of opportunity to upskill the game of our loan officers, I think.
Yeah.
I can comment too.
Good. Maria?
I mean, back to the CRM, I think, what is it that differentiates you as a company, right? Why are you not winning those customers? I mean, we have the lowest NPS score of any industry. I don't know if you guys knew that. We really need to work on the customer experience and understand why we're not retaining them more, right? And I think differentiating yourself as a company, what is your what's your value set? What do you stand for as a company? And really kind of showcase that to the market.
Yeah. So just when I look at some of the Stratmore studies and what you're talking about with our, you know, customer experience, it's a lot of times it seems to me like it's very fundamental things, but it's a very, you know, this is a complex process, but like, did I know up front what was expected of me?
Yeah.
And was that my experience, you know, that congruence there? Do you see some evolution kind of with, you know, the ability to get source data and, you know, I guess we could call it AI underwriting and some of those things to change the customer experience?
For sure. I mean, one of the things I'm a big advocate of is getting more digital data up front. I think loan officers love to kind of curate the paper. They want to oversee which W-2s and pay stubs or whatever come in. But that just kills the borrower later with additional conditions, I think. And so the benefit of going direct to the source also will power your operational efficiencies later. And so the change management on this, which I know we're going to get to, is part of the thing to overcome. But getting digital source data, I think, creates a better consumer experience, which will earn you referral business in the future, and will drive your costs down, which we're all seeking to do.
Yeah.
Yeah.
Maybe the last thing on this topic, John and Terry, when you were talking, I'm thinking, okay, we have this borrower intelligence that's out there that says this is happening in their life, and here's their current financial data. And John, you work for a company that has pricing intelligence, So we've got these disparate sources of data. Do you see an evolution where we're going to have kind of a AI or technology oversight that can take that and help craft it into advice engines, something along those lines?
Yeah, certainly. On a personal note, when I bought my first home, all of a sudden I started getting mailers of refinance opportunities, and they're very generic and not helpful at all, and those just kind of get thrown in the trash. But some of the things that we're seeing are being able to help engage with lenders on where are the opportunities. It's daunting to look at an entire customer base and try to figure out manually who we should be talking to, who's got, who's got opportunities in different areas in different ways. So getting that source data in, pushing it into a pricing engine that really helps you evaluate that dynamically, and then drive to loan officers, here's your real opportunities. Here's the borrowers that are in the money or have significant opportunities on a second lien that you should be going to talk to. And that enables them to go have more personal conversations where the consumer just doesn't feel like they're being mass marketed to, but they're really cared for.
Yeah, and I think that fits with the concept of kind of humans powered by AI, which seems to be, at least for the next stage of AI in many ways, where the real opportunity is, of course, your mechanic or your doctor or your loan officer in this particular case. Okay. Switching to the expense side of things, I was in a one-on-one with our operations leader, and she said, I feel like a seasonal worker anymore because, just 2 months ago we were way over capacity, and just like that, we were at kind of full capacity, so to speak. We're not busting at the seams, but and I can just see with the rates staying where they're at, we'll probably have this seasonality. Maria, what do you see lenders doing to maybe manage expenses or be more scalable?
Yeah, this is
Another easy one.
No, but I think it's a very important question. I think that as an industry, we have done the same thing over and over and over, and we need to change, right? Not to be glib, but the name of this conference is Innovation, right? It is time to change. We can't do the same process that we've been doing for 50 years because, okay, so the cost to originate a loan is $14,000. I just came back from the MBA regulatory because I am a lawyer. Don't tell anyone. By training. And unfortunately, they're actually going to look at costs even more, even basic costs, the regulators, that is, such as appraisal and title, and all of that is going to create compression, right? So when I look at us as an industry, and what we haven't done very well is think about what we need to do differently, right? And it comes down to people, process, and technology. At least in my opinion. People are the core to your company's success, right? And we have bifurcated that in the mortgage industry, at least on the LO side, right? Because the underwriters are typically in the back office, the LO interacts with the borrower. We really need to invest in our people and in that customer experience, in my opinion. That's number one. Process, we need to look at every piece of your process and see what you can optimize. Like, really sit down. This is the time to do it. And I'll give you a personal example from us, from our company. In the fall of 23, a very large mortgage lender named Finance of America decided to stop its forward mortgage business. They happen to be a large portion of our revenue, not majority, thankfully, but a large portion. So we were forced to look at every aspect of our business and really decide, what are we going to do from a people perspective, from a process perspective, and from a technology perspective, right? Who are the people that absolutely you need to keep in your business? Those are the ones that you want to develop as leaders, right? What processes can you optimize? Look at the ROI on each process. I hate to be so granular, but that's my background from an operations perspective. You really need to get into the weeds and optimize each process. And technology, there are simple things that we did. So from a process perspective, going back, we changed things in our software development life cycle, right? We're still a manufacturing process at the end of the day. To improve that, from a technology process, we looked at simple things like ticketing system, right? We improved that. It's much easier to use, it's less expensive, and it has the functionality we need. Like, those are simple things that we looked at. I think at the end of the day, it's Bezos, love him or hate him, right? His company is a success story. So I love when he says in his letter to employees about day one thinking, which is start each day as a new day, be innovative, start fresh. Don't let the way you've always done things kind of mar the way that you do them going forward.
Yeah.
So.
Awesome. Awesome. I almost feel like we could segue into what was going to be our last question a little bit with this and continue this conversation around expense management and scalability and people process technology with change management as well too, because that's really kind of at the heart of the whole thing. And I feel like I'm stuck half the time because I know that we should be doing what Maria advises, but we're running the company right now. We're trying to be frugal with the company and deal with the day-to-day. And I liken it like to be flying a plane and you're supposed to get out and, get under the cowl, the hood, and try to fix it, while you're flying the plane. So it seems, at least in my experience, challenging to do. So Richard, why don't you talk a little bit about change management, choosing, implementing, adapting, and this could be people, process, or technology. And then, I'd like to hear from everyone else as well on these, because you guys live that every day. You see lenders, and sometimes you're probably shaking your head, why can't they do this, or whatever it might be. But I think you could offer a lot of great insights for us.
So yeah, when I talk to a lot of mortgage leaders, and here's what I've learned when it comes to change management. This is a time for really good leaders in the industry. It's a tough market in lending, and it's the time for leaders to shine. And I've seen it from our clients and in all of the conversations that I'm having. Really good leaders are good at sniffing out what the business needs, right? And they are laser focused on those needs. Not the nice to haves, but the needs. And the needs are, I need a new CRM. My CRM's not being used, right? So that's a wasted cost. Maybe you have bad data. I need to fix the cost of my credit pools. Credit's gone up by 400% for some of the different pieces that are part of credit, right? So maybe you focused on soft credit pools. I need to lower the cost of my verifications because it's gone up by 140-some% over the last couple of years, right? What used to be $20 for a verification is now $65 for a verification. And so the reason that it's important to have a really strong leader who is focused on these needs is you take those needs and you quantify them. And that goes down into your change management plan. And you have, for me, I'm going to end this just by saying a quote from Yoda, forgive me. But it's do or do not, right? There is no try. This is not like a nice to have or choose your own adventure. When you know that there's a need that you need to solve for the business, you have to drive it in the organization.
So that's kind of like where it starts then, right? The decide, right? This is the problem, and then you look at the solutions. What else around people, process, technology, change management would you guys offer up?
Yeah, I mean, one thing that you said that I would echo is I see a lot of lenders that, whether it's the capital markets team or lock desk users or loan officers, they're kind of doing things the way they've always done them because that's what they're used to. And again, it's a great opportunity, a great time in this market to look at that and really hone in on what are our pain points, what are things that aren't efficient, and that takes some dedication to actually kind of look in the mirror a little bit, because a lot of times when I'm talking to lenders and you say, well, what's not working well for you? They don't have a lot that they're saying because, again, they're kind of stuck in, well, this is what we've always been doing. There's a lot of new technology that's available that drives a lot of efficiency, a lot of value. So I think it's really important to encourage lenders to be looking, at what are their pain points, and then identifying partners that can help them solve those pain points. It's critical for a lender to have a really strong team that's pushing forward on that change management. You make a decision to go forward and do it. You got to be really aligned on what your objectives are. If you've got any disorganization there, it has the potential to, de-risk and get you off track to where maybe you're not even getting the value that you were originally targeting. And also super important for the provider that you're working with or the vendor that they've got a process in place to help shepherd that change, get into your workflows, understand how you're using systems, and help you identify that too.
One, two words that I'm hearing from the leadership perspective, and of course there's a lot more there, but decide and then stay committed. Commit and stay committed all the way through, right? So Terry, you've worked for agencies, you worked for technology providers.
This
What
is a
would you
favorite
say to that?
topic.
And then we'll finish up on this with you, Maria.
I love what you said, and I think having the capacity to enable and manage change is important. And a lot of times lenders make the mistake of kind of taking staff offline to have this side project when they still kind of have their day job. And I think that's kind of a recipe for at least extending a timeline to implement change, and it leaves a lot at stake in terms of having success. So I think that's important. I think having champions internally to say, this is a good thing, it'd be a good outcome, everybody get on board is helpful. The other thing I'd say is change inevitably requires a bifurcated process, right? At least at the beginning, you're piloting, you're trying something before you fully implement something else. And so lenders, I think, lose patience with the bifurcated process. And I get it because it's an investment. Having to do something different depending is always additional cost. But I'll give you an example. One of my favorite topics is e-mortgages and moving into e-notes. And I know the fungibility of an e-note is oftentimes the question, although increasingly, at least your conventional investors will accept them. But you're going to have exceptions where the borrower doesn't want to do an e-sign or the investor doesn't want to do an e-sign, and so you have a bifurcated process. But every e-note you do is $400 in savings. You just need to do the math on that to realize that the bifurcation is immaterial to the benefit. And so I just say, kind of push through some of that friction that comes up when you're thinking about implementing change, even if it looks like it's messy, because the outcome actually results in a better consumer experience, a more efficient process, and bottom line savings.
Yeah, so faith comes to mind with that.
Yes,
So,
faith.
Decide, commit, have
Gotta
faith
have
that
faith,
you're going to get to the end of it, because it is a J curve. So like if I wanted to set up, say, outsourcing or a new technology project, we're going to go backwards at first, right? Our costs are actually going to go up at a time where I don't want that to happen, but there is, a light at the end of the tunnel, right?
Yeah, exactly.
Okay. Maria?
Perfect segue. I think where you talked about the ROI, I would start with that, right? Evaluate the cost and the benefit, right? Make sure you quantify the change that you're going to make. Plan. A lot of us don't like to plan. I know at least my teenage daughters are horrible at planning, and I've tried to teach them, and I've realized I'm not very good at explaining planning. So plan, and then get buy-in. I think buy-in is probably the most important piece of change management from my experience. If you don't get buy-in from your people, a change is not going to be that effective. And then the one piece I would add is evaluate the change after you've done it and quantify the benefit and come back to the team. Like, look, yes, we went through this pain, but look at the benefit that it has created for us.
Yeah, I think that's, that commit and having faith is part of that, because your teams have to, they're going to follow the leader in that framework. But I also think that, as the purchaser and the implementer, you have to realize it's going to take longer, and you have to stay the course with the whole thing, because people don't change easily, but they will.
Can I add, I think, to your point about how it always takes a little longer? Having a vendor partner that's invested like you are in the outcome is key. And so be very choosy about your vendor choices, right? There's a lot of shiny objects that look great, but what is their track record? Talk to some of the previous sales they've made and how that implementation went and what kind of partner they were. You'll set yourself up for a better success when you pick partners that are as invested as you are in the outcome.
Yep. Yeah, so, I think it's, and even when I've reached out to lenders about it, a certain vendor, I'm looking for advice too, not just like, are they good or bad? It's not a thumbs up, thumbs down type of thing, but like what went wrong, how did you recover, what would you do differently, so you can get some sage advice during that time. And we're a pretty close industry. There's a very small minority of people that don't want to share, but most of us are in it to try and help each other. So I think that's really good. And I also would just say that, and you guys will probably shake your heads yes on this, you, as the lender, you have to be a good partner and be prepared and be participatory and manage your people so that they don't just throw the vendor under the bus and all those things, you know what I mean? So it does take two to tango, so to speak. Okay, 420 here, just for the record. Let's switch to new things that you're seeing. And we talked about this a little bit. I'm always trying to think of like, where I'm going to call it the holy trifecta. Where can I improve the customer experience, my speed, and gain efficiencies or lower costs, So that's kind of like the sweet spot for me of where I would want to make some changes. What exciting things have you seen lenders doing in the market? John, you can start with that.
Yeah, sure. Along that vein, there's kind of two areas that really come to mind for me. I think the first would be automation, which a lot of technology is really pushing into, and not throwing the baby out with the bathwater of automation, because there's edge cases and there's things that need to be caught. And so looking for technology and providers that are able to give you flexibility in automation so that you can automate the mundane. You can really get your resources focused on the edge cases and the things that they're valuable in applying their minds to and their time versus continual button clicks. And it goes back to evaluating your processes. So that's a huge one. I think the second big thing that I get the opportunity to work with a lot of lenders on is how can we get more granular in pricing? Obviously, what the rates, it's difficult. And so how are we looking at technology? How are we making things more flexible, but at the same time, really fast and nimble? So if you need to adapt with the market, you can change your pricing strategy. You can bring new products and release those. So having a vendor that's able to be really flexible, give you more granularity in your structure and how you're targeting things. Those are kind of two areas that I think really stick out.
Awesome. Okay, we're going to have to go rapid fire here, but I want to hear from the other three on this topic. Terry?
Just go digital. I know you want to meet the borrower where they're at, so it doesn't mean you aren't doing tech and touch, but go digital.
Okay. Maria?
Valuations, there's some cool AI in that space. And then verification of assets, income, employment. There's a lot of new development in that space. And I think the new open banking proposal is going to help develop that space even more.
Wow. Okay. And last but not least, Richard?
Maria, you took my plug, so thank you.
Well, you can always echo it.
I would just say that I'm really impressed with some of the folks that are implementing, for example, verifications. They're able to completely eliminate the incumbent that they were using before and only use like a consumer permission provider. And that's pretty amazing. If you look at the cost savings, for a medium-sized lender, that's millions of dollars in cost savings.
Yeah.
Several full-time employees.
And there's, effort behind that, obviously well worth it. But yeah, that's good. We have time for one question. Anybody out there? No? Well, I would just say I really, really appreciated this. This has been like inspiring for me to hear from you guys about your own experiences. And I think that you all set the bar very high for a part of our industry that we forget about, which is all of our partners out there. So thank you very much. Thank you all for supporting the CMBA. Looking forward to lots of more exciting panels and lots of information. And please stay engaged and get the most that you can out of this conference. Have a great day.